Without further ado, let us start this session. Good evening, ladies and gentlemen. I am Aditya Bharadwaj, and I am going to be the host for today's seminar. Alongside, I have Venkateshwaran, who will be co-hosting this session. I am very much pleased to welcome you all to this seminar on bank audit. I take great honor in introducing CA Padmaja ma'am, who will be taking the seminar today. Before we start the session, let us first get to know our wonderful speaker. CA Padmaja ma'am, who is 24 years old, has recently qualified and is an associate member of Institute of Chartered Accountants of India, ICAI. She is also a partner in SRBR and Associates LLP firm of Chartered Accountants with a legacy of about 40 years. She is a dedicated and energetic chartered accountant with exposure and experience in audit and assurance engagements, especially in C&AG audits. She has acted as the team leader in statutory audits of client portfolios ranging from various industries, including manufacturing, service, and construction. She's also proficient with hands-on expertise in international taxation, transfer pricing, and consolidation. She has been an active participant in delivering India's accounting and audit engagements, bank audits, ERP audits, internal audits, tax audits, and due diligence engagements. She has addressed students on various subjects of professional interest in seminars organized by SIRC. She has also addressed members on bank audits. She has been awarded the best presenter for presentation skills exhibited in MCS course conducted by ICAI. She's also a school topper in her grade 12 exams conducted by CBSE. She's also a trained Carnatic singer with a lot of passion towards singing. So before I hand over the stage to CA Padmaja ma'am, let me just brief you about today's topic. In this seminar, we will discuss the various aspects of long format audit report and the verification process of advances. We will also discuss the common errors and irregularities that auditors may come across during the verification process and how to address them. Our goal is to provide you with a comprehensive understanding of the long format audit report and its significance in ensuring the integrity and reliability of the advances portfolio of a bank. I hope that this seminar will be informative and beneficial for all of us, and I wish you all a productive and engaging session. Thank you. I would like to request CA Padmaja ma'am to take over from here.
Am I audible?
Yes, ma'am, you're audible.
Thank you, Aditya, for your kind introduction. Very glad to be part of this program today, to be showing some light to students before they enter the bank audit season. Very good evening to one and all. Although I do wish that this was a physical session, but after COVID, this has actually become the new normal. So anyway, thank you for having me here. I would like to share the screen. Just tell me, Aditya, if it's visible.
Yes, ma'am. Kirtana, please check your audio speaker. We can hear ma'am clearly. Yes, ma'am, we can see your screen. Also, before beginning, just a small announcement. So no one is allowed to unmute while ma'am is speaking, and the option to give ask questions will be given to you at the end of during the end of the session. You can put your questions in the chat box only. You cannot unmute yourself.
Without any further delay, let's jump to the topic today. So today we'll be covering long form audit report and verification of advances. And if time permits, we can go to the red flags and MOC as well. As we all know, the banking system that's operating in today's world is not how it used to be a few decades ago. It has undergone a metamorphosis, a radical change over the years. Although there's so many changes happened over the period, there are two major activities of the bank that has remained unchanged. One is accepting deposits, and the other is the granting of advances. So these are the two main activities where the income generation is mainly from the granting of advances. In a branch statutory audit, the verification of both of this is very, very essential. And more so in case of advances, because the advance is the chief revenue source for any bank. In those advances also, the most important thing is certifying the non-NPA statement, the non-performing assets. And if this is not properly certified, then we become NPAs, non-performing auditors. So it is very, very careful that we do it with a lot more, diligence when we are executing the work. And through this change from a traditional banking system to a completely computerized environment, we can actually capitalize on the opportunity, as we've been using technology in our everyday life, and this is also expected to be done with diligence when we are doing the bank audit. So we can take a lot of reports that are readily available in the CBS banking system, which we can make use for our benefit and do our verification in a more efficient and effective way. It could actually help you in saving a lot of time as well. So that should be kept in mind by the students and the staff who are actually going to be on field while doing the audit. Next, we'll just brush up the basics for people who are doing the bank audit for the first time. This is very, very important. And for the others who've already been doing, this could be just a quick revision. So we'll look at what are the different types of advances. As we all know, there is something called the demand or term loan, which we've been usually seeing in a lot other statutory audits as well. So these term loans, which have a predetermined installment, so it is already given in a schedule before the sanction of loan, it's given in a schedule that your repayment will be for fixed number of months and fixed amount. Every month you're going to pay this much amount as equated monthly installments, of which one portion is going to be for the principal and one portion is going to be for interest. And when should you pay that on specific dates, and all that is given in the statement. So this is a term loan where your repayment is either on demand. When the bank demands the loan, you're going to repay it, or it is through predetermined installments, which is term loan. This is one. And then there's something called the CC account and the OD account, which is normally misunderstood by a lot of people, and they use it interchangeably, which is actually not right. So to appreciate the difference between CC and OD account, I will just briefly explain it. A CC account is a short-term or a medium-term loan. So it could be either short-term or medium-term, and it is given on the basis of hypothecation of a book debt or stock. So what is the security that we are supposed to give for this CC account is book debts or stock or any other security. When you are giving this security and then asking for a CC account, a loan account from the bank, you will be given a fixed credit limit, and you are expected to operate within this credit limit. So for example, I give 10 lakh worth of inventory and inventory and book debts put together. If I give 10 lakh worth as security to the bank is going to sanction me a credit for a certain amount. This amount is going to be less than the value of the security. So limit is the upper limit within which you are expected to operate. And then there's something called the drawing power. So for example, I gave 10 lakh worth of security to them, and of this 10 lakh rupees, they are not going to give me entire 10 lakhs as my credit limit. What they'll say is, of this 10 lakhs, you are eligible only for 80% of it. So I'll get only 8 lakhs. So in that 8 lakhs, my drawing power will be computed. So if my drawing power is 8 lakhs and the fixed credit limit is 10 lakhs, I am expected to operate within this drawing power. So my balance anytime cannot be more than 8 lakh rupees. If it is going to go there, then there are other consequences which will be handled in the IRAC norm session. But the basic understanding is there are two different terms in a CC account. One is the fixed credit limit, the overall upper limit, and then there is the drawing power limit, which is lesser than the fixed credit limit within which the borrower, the account holder, is expected to operate his accounts. This again, the CEC account is repayable on demand. And whatever is the amount that we are drawing from that CC account, interest will be charged on that amount withdrawn. So for example, my eligible drawing power is 8 lakh rupees, but what I'm drawing in this month is only 6 lakh rupees, then interest will be charged only on 6 lakhs, not on 8 lakhs and not on 10 lakhs. So whatever you are drawing from that CC account is what you will be charged as interest and not on the drawing power or the fixed credit limit. So who will use this CC account generally are businessmen, and for the purpose of working capital requirement. So this is often used by them. Let's move on to the OD, overdraft. Overdraft is a short-term loan given to current account holders. So before I have open a OD, I ask for an OD, I should have a current account. So for example, if my current account has a balance of 2 lakh rupees, and what I'm withdrawing from that current account is more than 2 lakh. So for example, I've drawn 2 lakh 70 rupees. This difference of 70,000 is the rupees that this is the money that I have overdrawn. This overdraft will be charged interest. So this is the difference between CC and OD. OD again can be taken by individuals or by businessmen as well. So this is the basic difference between CC and OD. You should hold a current account before you open an overdraft. And OD again can be given on based on security. Then you've all read in your basic 12th standard accounts as well what is a bills discounting. When I have a debtor and that debtor promises me that he will pay money within 30 days, but I have to settle my vendor, the supplier, money immediately. I have only 1 week's time. I can't wait for 30 days when my debtor is going to settle the money. What I will do is I will approach a bank, tell them that I have such a debtor who will pay me within 30 days, but I am in need of money immediately. Give me money. So what the bank will do is will check the genuinity of that debtor, and then he will, for example, if what I have to receive from the debtor is 10,000 rupees, the bank will deduct 2,000 rupees as charges and then give me 8,000 rupees immediately on hand. So I can use this 8,000 rupees to settle my vendor, and on a later date, on expiry of 30 days, the debtor will come and settle the amount to the bank directly. Next, we'll move on to the classification of advances. As I already told you, in a bank audit, advances is very, very important. So because before we start any audit, for a moment, I would like to deviate from this. Before we start any audit, we all know there is something called the SA 315, which talks about understanding the business of the entity and the environment in which the entity is. So as auditors, and the staff of auditors, we are expected to understand the business of the client before we start the audit. And usually you get to know from the seniors what is the business of the client before you start the audit. Similarly, you are expected to know what is the business of banks before you start a bank audit. In our case, bank audits, the business of a bank is generally accepting deposits and giving of loans. So what the bank does is it takes deposits from people who have money, and they pay interest on that, and it lends this money to another borrower who is in want of money and collects interest from that borrower. So the difference between the interest that it is going to give to the deposit holders and the interest that is going to charge from the borrowers is the profit that the bank is going to make. So the advances and deposits are the most important. And advances is very, very important because this is a chief revenue source of income, and also there are various regulations that govern the advances, including the IRAC norms. So we are going to look at the types of facilities and the classification of advances into various buckets. So one is based on funds. What is funded and what is non-funded? As we all know, funded is when there is actual outflow of money from the bank. So the bank is actually going to settle money. There is an outflow. So for example, as we saw, a term loan, or many of us would have taken a vehicle loan. In that vehicle loan, when you go approach a bank that I want money to buy a two-wheeler, the bank will give you 10 lakh rupees or 8 lakh rupees or whatever is the money that is required for buying that vehicle. And there is an actual outflow of money and you are going to pay back the bank. Now, if it is a non-funded advance, what will happen is only there will not be an actual outflow of cash, but there is some document that is being given where the bank promises that in case this borrower fails to pay the money, the bank will settle. For example, bank guarantee or a letter of credit. So, for example, you were going and approaching a bank that I want to start this project and they're asking for a bank guarantee. Then the bank will, what will give is only a statement or a paper. In that paper, there will be a statement stating that in case I fail to finish the project, or in case I fail to pay my vendor in the course of executing the project, then my banker will settle the money to the vendor or the person. So this is what is non-funded advance. Next, we'll go on to the type of advance that is classified based on geography. So based on geography, there are two different types. One is inland and the other is export. So in case it is an export, for example, it's a packing or pre-shipment credit, or it's a post-shipment credit. So all this in case where the bank lends money for the purpose of or in relation to an export, it is called export related advances. And in case it is given inside the country, it's an inland advance. Next, we'll move on to based on security. So in case of security, there's a secured advance and there's an unsecured advance. So secured advance is an advance given by the bank where that advance is being backed by a security. For example, I mortgage my house and then I take a loan. That is called a secured advance because there is a security given. In case of unsecured advance, for example, personal loans. These personal loans, they do not get any security based on your performance with the bank, your general performance with the bank. They'll give you this much amount of limit that you are eligible for this much of personal loan. But the interest charge on these personal loan will be slightly higher than what they charge when it is secured. Only reason being it is secured and this is unsecured. So based on next is a based on sector. So in case of priority sector and non-priority sector, where there are borrowers who need the aid of government or need to be supported or encouraged by the government, they are called priority sector advances. And where it is not required, it is called a non-priority sector advance. So with this background, we'll move on to the next topic, audit of advances. The structure of the presentation today will be like this. First one will be the statements that you need to obtain from the bank when you start the audit, and then the extent of verification that you need to do, and then multiple stages of verification, and then we'll look at the red flags or indicators of fraud or irregular accounts. Then we'll move on to verification of non-funded advances, and then reporting of verification and the rectification. All right. So as you all know, before you begin any audit, be it a statutory audit or an internal audit or any kind of audit that you start, you ask certain documents, you ask certain files that you need before you start the audit. So in case of a bank, what all should you ask is what we'll look at in this slide. In any other audit, the general practice here also is you will have to ask for the balance sheet and profit and loss account of the previous year, which was duly signed by a chartered accountant. So this balance sheet and profit and loss account that is signed by the previous auditor will give you various insights. It's not only going to tell you the financial figures, what is the portfolio of the bank, in what kind of advances they are operating in, and what is the amount of advances. It will also tell you through the audit report and LFAR, what are the adverse remarks that the previous auditor had identified during the course of his audit in the previous year. As you all know, the audit report is a general report, just like you do in case of any other statutory audit report, but it will have certain changes like MOC in the main audit report. And this LFAR, a long form audit report, is a specific report that is only with respect to banks. You cannot find this LFAR in any other audit. So only with respect to banks, this LFAR is a unique statement that is very specific for banks alone. So this LFAR will contain very, very specific questions for which the auditors are expected to give very, very specific answers and not any general comments. So this LFAR is going to list out in specific, and you are expected to hit on the nail by giving the answers that these accounts are, these are the observations that we identified in these accounts. So this LFAR is a very unique statement in case of a bank. Otherwise, the balance sheet, profit and loss account, and audit report, just like you have in any other audit, is going to continue in a bank audit as well, which can be utilized. Next, again, something very special for bank audit is the sanctioning powers of authorities. In a bank, not anybody can do anything. So certain rights are assigned to certain people. So for example, at the manager level, he is authorized to give only this much amount of loan. And the next level, he'll be given authorization to give an extra amount of loan. So there, at various ranks of the bank, you will have certain amounts that the rank officials can grant us advance without seeking approval of the next level. If he is not authorized to, for example, if I'm authorized to sanction loans only up to 20 lakhs and the borrower comes and approaches me for a 25 lakh loan, I am not supposed to sanction it because my limit is only 20 lakhs. So I will refer it to my next bench, who is the rank above me. So he will be authorized to sanction this loan within his powers. To understand who is authorized to give what amount of loan, you need to understand the sanctioning powers of authorities, which is a document that you are expected to first go visit the bank and obtain on the very first day itself. There's also one more need why you need the sanctioning powers of authorities. There is a very specific question in LFAR. In the sanctioning or disbursement column in LFAR, the first question that is asked is whether all the loans that were granted by the branch during the year are well within the limits delegated to each of the authority. If it is above limits and by violating the limit the official had granted loan, then you will have to cite which advances were given like that. So you are expected to give in details about each account that was violated by giving the loan that was above their authorized limit. So to answer this question, the sanctioning powers of authorities is a very, very important document that you need to obtain on the very first day of audit. Just like you obtain balance sheet and P&L and audit report in LFAR, you're also expected to obtain the sanctioning powers of authorities as well. And it's a very important document. Next, we will require the NPA statement of the previous year. Why is NPA statement of previous year important is for two reasons. One is the NPA of non-performing assets of the previous year should be classified as non-performing asset in the current year as well. So in the current year also, for example, an account number 0001. Aditya, can you mute that person?
Yes, ma'am. Just a second. Sorry.
Yeah, thank you. For example, an account 0001 was classified as NPA in the previous year. That account number should also be classified as NPA in the current year. So what you will have is the signed NPA statement of the previous year. And if you ask the bank, they'll give you the NPA statement for the current year also. So as on 31st March 22, you will have a list of accounts, NPA accounts, signed by the previous auditor. Today, on 31st March 2023 also, they will give you the list of non-performing assets statement for the current year. What you will have to look at is, for example, if there are 10 NPAs in the previous year, that is as on 31st March 2022, there are 10 NPAs. And in the current year, there are 15 NPAs. You will first have to look whether all the 10 accounts that were NPA in the previous year are there as 10 NPA in the current year also. So I hope I'm clear here. So you will get two different statements which you're going to compare. One is as on 31st March 2022. The other is as on 31st March 2023. You will have to ensure that this 10 accounts that are there in 31st March 2022 should also be classified as NPA in the current year 31st March 2023. If it is not classified as NPA, you will have to question why. Then you will look at the statement of the account holder, I mean the borrower. Then you will understand whether there is a genuine credit or not. If there is a genuine credit, they can not classify as NPA current year. But the genuinity of such credit, the genuinity of such transaction should be verified, and you must be satisfied that this account will not be an NPA in the current year. If it is, if it is not genuine, it should highlight to you, and you need to report it to your engagement partner immediately. Next, audit report sorry, another reason why NPA statement is important is in the NPA statement of the previous year, there will be date. For example, account number 0001 became an NPA on 20th March 2022. For example, account number 0001 became NPA on 20th March 2022. If that is the date in the previous NPA statement, you will also have to check whether in the current year 0001 account number NPA is there, but the date is given as 20th March 2023 instead of 2022. Then if there is a variation, it's very, very serious because they cannot play with the date of NPA. Once the account becomes NPA on a particular date, it will be an NPA forever until there is a proper credit and clearing of all the earlier dues. So I hope you understand. You should check whether all the accounts are there or as NPA in current year also, which are classified as NPA in previous year, and also ensure that the date of NPA is very, very critical in an NPA statement. It is not enough if you check only the account numbers. You are also expected to check the date of NPA. So you will have to ensure that the date of NPA in the previous statement is the same in the current year also. If there is a difference, again, you will have to question why. Let's move on to the next one. Also, I wanted to highlight one more point. The usual practice in our firm is the senior partners of our firm visit the branch in person before we start the audit, actual audit. However long, however distant is the place the audit is, they visit not only to understand the figures, the financial figures of the balance sheet, P&L and all that, they will also understand the environment in which we are going to work. And then they come and they give all the necessary inputs to the articles here to make them understand what they are going to face. So because this bank audit is not like any other audit for various reasons. One, in terms of technical jargons. For example, if you talk about an advance in a corporate world, for example, there's a company that you're auditing and you go and talk about advance, there'll be multiple reasons or meanings for that advance. Could be trade advance, could be employee advance and all that. But here, when it is advance, it means it's a loan given by the bank to the customer. So the basic the term that you've been using all this while itself differs in a bank as compared to the companies that you've been auditing. So this technical jargons might make you feel a little uncomfortable in banks because you're not very confident or not very sure about that thing. So if you're not sure, it is okay. You need not very abruptly show it to the bank officials there. You can come and talk to your engagement partner or your senior and then understand the meaning of that and then go back to the bank official and talk comfortably on this. That's one reason why it is different from normal audit. Second, there is enormous burden to complete it as early as possible, because unlike any other audit where you have time and you can aramse sit and do any work, here you are under lot of pressure to complete the audit as early as possible, and within that time you are expected to report a lot of things, answer a lot of questions. So it is very, very important that you plan your work and segregate amongst yourself, the audit team, how to do, what to do, and who should do it. So this is very, very important. And I would also like to place a humble request to all of you that please do not get carried away by the treatment that they give you in the banks, because they're going to treat you with a lot of respect, ma'am, sir, and all that. They're going to give you 1 hour once some kind of snacks or something. All this will happen for 2 days. The third day onwards, when you start talking about, when your auditor starts talking about marking an account as NPA, the slight friction starts. So it's very important that you do not get carried away by all the treatment that royal treatment that they give you in the audit. Your focus is on finding out any kind of adverse or irregular remarks that you have with respect to an account, and report it to your engagement partner, however tiny or small it could be. Next, we'll look at the statements that are required for 31st March 2023. While talking about this, I might be slightly touching upon the topic of tomorrow's session also, but it's okay, because I would request you to listen both the sessions, this and tomorrow, so that it gets very deeply registered in your mind what is required while in the course of audit. So first, let's see facility or party-wise list of accounts outstanding along with the outstanding balance. So this is called the overall and overall advances, total advances account, loans and advances account. It's a statement. The statement will have multiple columns. In that column, the first column is going to be the account number, and then there will be name of the party, the borrower. Okay, so we are talking about advances all this while. So the loan, the bank has given loan to somebody, and for example, if the loan is to me, and my account number is 0001, loan account number is 0001. So it will be first one will be loan account number 0001. Then there will be my name, Padmaja, and then there is going to be what kind of facility. For example, I've taken a jewel loan. So if there is a jewel loan, it will say jewel loan, and then what is the amount sanctioned for this jewel loan, that will be given, and then what is the outstanding amount as on 31st March 2023. So for example, if I was sanctioned the 10 lakh rupees of jewel loan in the month of August 2022, and on 31st March 2023, if the balance of the jewel loan is 6 lakh rupees, that will be captured in the statement. Likewise, it will be captured in case of every facility. For example, it could be CC account or OD account or term loan account or a vehicle loan account or a housing loan account or any kind of facility. Facility wise, party wise, so name wise, the list of accounts outstanding along with the outstanding balance as on 31st March 2023 will be available in this statement. Why do you need this statement? Is to understand how many accounts are there, how many different types of accounts are there, and under each of these accounts, what are the types of facility, and then under each facility, what are the accounts, number of accounts available, and what is the outstanding balance. So you get a complete idea of the portfolio of the advances in that specific branch. Only then will you be able to get an idea how much to verify under each facility. So to understand this, you will have to in detail check this statement. Next is the CC or overdraft accounts, month-wise details of debit and credit transactions. Now, this month-wise details of debit and credit transaction is very, very important. For this, I would like to tell you in brief why it is important. Please pay attention here. There was a circular given in 2021 by the RBI. In that circular, there are certain 6 list of items that are very, very important, which most of the auditors themselves don't know. So because the seriousness is not appreciated. So these 6 circulars are very important. You will have to remember this. These 6 things in the circular. One of which is, if an account runs out of order and there are no credits, or the credits available are not sufficient to cover the interest debited, then it will become an NPA as on the balance sheet date. So this is what was given earlier. So on 31st March 2023, you have to work back 90 days. For 90 days previous to 31st March 2023, if there was no credits at all, or if the credits in that account was not sufficient to cover the debits, then the account became NPA. This is what was the earlier provision. But through this circular, what happened is the RBI changed it by striking off as on the balance sheet date. So what happens is any time during the year, not on 31st March 2023, any time during the year, for example, from 1st to August 2022 to 90 days from then. So August, September, October, assuming it, the 90 days ends on 30th October. From 1st to August 2022 to 30th October 2022, which is in the middle of the year and not end of the year, during this 90 days period, if there was no credit at all in the account, or the credit was not sufficient to cover the debit, then that account will become NPA on 30th October 2022 itself. So previously what we used to do is only check the 31st March 2023, from then we work 90 days back. But from now on, what you should do is check any time during the year. To check any time during the year, you need the account details of debit and credit transactions. So this is very, very important. For another reason, this credit transaction is important because, for example, I approached a bank for a loan. What they will ask me is the projections. If I'm the company, I'm the director of the company, the bank is going to ask me, give me projections for next 3 years or next 5 years. So I am projecting 10 lakh rupees. And I will also submit my audited financial statements after the, I will also submit my audited financial statements once the audit is over and the year end is closed. So once I submit this audited financial statements, they will have to compare this turnover given in the audited financial statement. So for example, in my audited financial statements, if there is a turnover of 10 lakh rupees given and it is signed by the auditor. Now this 10 lakh rupees should have been given in the bank. So for example, this 10 lakh rupees is the sales I made, correct? So if this sales is there in my financials, then this 10 lakh rupees should also be in my bank account because I would have collected that money from my debtors, correct? They have to compare whether this 10 lakhs was actually received in the bank account or not. If what I have received in bank account is only 2 lakh rupees, while I made a sales of 10 lakh rupees, it means this 8 lakh rupees might have received in cash or might have been received in any other bank account, which is a serious problem. Whatever is the turnover stated and whatever is the money collected should be collected through this bank where he holds the CC account. So this is very, very important. So to verify all this, whether the sufficient credits were there, whether there was all the amount was properly received. For understanding this, you will need the detailed transactions, debit and credit wise transactions, which is available in this report. So I will also tell you, all these reports are available in something called the auditor's menu. Please note down, in all the CBS that you're working, the bank's interface will have something called the auditor's menu, from where you can get all the reports. You can generate all these reports. These reports are available in the auditor's menu. Once you click that, you can use all this for answering the LFAR questions as well, which is very, very important. You can make use of this reports to answer and verify, and also for selecting samples from these reports. I hope you understand this. Next is the non-performing asset statements. Unlike all other statements that we are talking about, this facility-wise account balance and all that, these are not going to be attested by the auditor. That is, he's not going to sign it. He's not going to confirm it. But the NPA, he's going to confirm. He's going to say that these are the accounts that are in NPA and under these category D1, D2, D3 or a loss account. This is the bucket that this asset is falling. So that will be given in the NPA statement, and this is going to be signed by the auditor. So this NPA statement is going to be attested, which is very, very important. Next, you have list of accounts where regular or ad hoc facility is due for renewal but has not been renewed. So an account is should be renewed within 180 days from the date of it's due for renewal. You will understand what renewal means in tomorrow's class, but for a moment, let's understand there's a procedure called renewal, and this renewal should be done. If the renewal is due today, then within 180 days, the borrower should come and renew this account. So if it is due for renewal today, within 180 days, he should do it. If he is not doing it, then it will become an NPA. So to understand what are the list of accounts that are due for renewal but were not renewed, the system itself gives you a report of all that which is available in this statement. Next, where inspection has not been carried out in last 3 or 6 months. Again, inspection is another procedure carried out by the branch officials where they go visit the place of the borrower. If that inspection was not done, then the list of accounts for which inspection was not done will be readily available in this statement. Where accounts are overdrawn beyond sanction or DP limit. Like I was telling you what a sanction limit and a DP limit is. So as I said, the fixed overall limit, no, that is the sanction limit. So in my first example, I said 10 lakhs is my sanction limit. And I also said my drawing power is 8 lakh rupees. So if my account is overdrawn, I keep taking money from my account very frequently. And by taking my loan account, the balance of that account falls beyond 8 lakhs. Or worst case, it falls even beyond 10 lakhs, then it's an NPA if it stays like that for 90 days. So again, when this happens, what are the accounts that are being overdrawn beyond the sanction or DP limit can be obtained from this statement. Next, where stock or book statements are in arrear. So again, when it's a CC account, as I told you, it is going to be given on the security of a stock or book debt. Okay, so if the stock or book debt, they are going to calculate a percentage of it and give us limit. Okay, so for this, they will submit these stock statements every year. See, first you need to understand something. If I'm taking a loan against a security of my building, my property, then the property's value is not going to change every day or every month, correct? But a stock or book debt statement is going to change every day. Today I make a sale, my stock, today I have a stock of 100 units and I make a sale of 20 units. End of the day, I will have only 80 units. Again, tomorrow I will purchase, I will take 30. So my balance will become 110 units and the value also will keep changing accordingly. So there's going to be a frequent change in the security that I've submitted for the CC account, which is the stock or book debts. Okay. So I will have to keep changing my drawing power limit, which is based on the security that I've given, which is the stock and book debt. So to keep changing, how will the bank know what is the stock or book debt today? When the borrower submits a stock or book statement for that month ended, the bank will take it. He will key in this figure in the system, and the system will automatically tell what is the drawing power for this amount of stock or this amount of book debts. So this is how it is done. If the stock or book statement is not properly obtained and the stock statement is older beyond 6 months, for example, then my drawing power limit will become 0. And any balance that I have today, so for example, my outstanding balance is 2 lakh rupees and I have not submitted stock statement for 6 months, then my drawing power will become 0 and outstanding balance is 2 lakh rupees. The entire 2 lakh rupees will become NPA if I do not submit the statement in another 90 days. So these are the different ways how it can become an NPA, which tomorrow it will be detailedly covered, but I want to highlight to you what book statements or stock statements mean. Next, where stock audit is due but has not been done. So there are limits for beyond 5 crore sanction limit for accounts. They'll have to submit stock audit report to the bank if it is beyond 5 crore. If it is not submitted, then you will have to give in the LFAR. For answering the LFAR questions, you can make use of all the statements that I've listed in this specific slide. Where no insurance or inadequate insurance has been taken. Again, the drawing power limit computation is based on the insurance of the stock as well. So for example, I have 10 lakh rupees of stock, but only 8 lakh is covered in insurance. Then they will not take 10 lakhs, they will take only 8 lakhs and compute my DP. Hope you are clear with this. They will not take the uninsured stock. They will calculate only on the insured stock. So to understand whether DP was properly computed or not, you will have to know which was insured, which was not insured. Again, you will get this statement from the auditor's menu itself. So you will have to make use of all of this. So one big advantage in auditing in a CBS environment, a computerized environment, is all the required statements, all the required reports are readily available in the auditor's menu, and you can make use of it to your advantage. Next is the extent of verification. As you all know, in any audit, you will verify certain items 100%. So 100% verification is required. In certain cases, only test check is enough. So to understand what should be tested 100%, what should be test check is what we're going to see now. The selection of samples depends on the existence and efficacy of internal control procedures and report from various auditors. So, how will I select my samples? So, if the internal control system is in place and I'm satisfied that the internal controls are properly functioning, then I will restrict my samples. But if as an auditor, I am not satisfied that the internal controls are in place or they are not functioning effectively, I will increase my extent of verification. Also, like statutory audit, there are multiple other audits that a bank has to do. Many of you might have been going for concurrent audits also. So like concurrent audit, information system audit, risk-based audit, RBI inspections, all of this will be done. And each of those auditors will give a report. As statutory auditors of the branch, we will have to obtain all the reports of the other auditors who have given a report, verified and given a report during that year. You will have to read their reports. If you find an adverse remark, then you will have to increase the size of sample. If the report is a clean report, then you can be satisfied that the controls are functioning properly. So to understand whether the internal controls are functioning properly or not, there are multiple ways. So one of which is the other auditor's report. If the monitoring is not good or if there are high irregularities, then you will have to keep increasing the percentage of check. So what do you mean by monitoring is not good? As I said, if the stock statements are not obtained at all, or the stock statements are obtained but in irregular dates, they are not collecting month on month, but they are collecting on for one borrower, they're collecting 6 months once. For one borrower, they're collecting 2 months once. And this keeps varying. Then the monitoring is bad. So it's very clear that the branch official is not properly monitoring the account. So this, if you find such instances that there are too much irregularities and frequency is very bad in obtaining all this, then you'll have to increase the size of the sample and check whether you have any adverse remarks or observations during the course of audit. Next, what should you check 100%? Is the large advances. What do you mean by large advances? Large advances are those in respect of which the outstanding amount is in excess of 10% of the aggregate advances. We saw what fund-based and non-fund-based is. So both fund-based and non-fund-based advances put together, if there is 10 crores, for example, okay, if there is 100 crores, if there is 100 crores or 120 crores, let's take 120 crores. 120 crores is the aggregate advances, both fund-based and non-fund-based put together. Of that 10%, what is 10% of 120 crores is 12. So I should check all advances beyond 12 crores or rupees 10 crores, whichever is less. So you will have to take the aggregate of all the advances, apply 10% on it, whatever is that figure, that or 10 crores, whichever is less. If an advance is, if you find an advance for 15 crores outstanding as on 31st March 2023, then it falls above the limit. It is above 10 crore rupees. So you will have to check this specific account entirely from top to bottom, from the first stage to the last stage. You will have to check in detail. So you can't do a test check on this. So all those advances that are beyond this 10% limit or 10 crores, whichever is less, you will have to do 100% verification. And how this 10 crores is as or the outstanding amount is as on the 31st March 2023, not the sanction limit. So for example, I have taken 25 crores loan in August 2022, and on 31st March 2023, the balance is only 2 crore rupees. Then it is falling under the 10 crores limit. Then I need not check 100%. I can check it on a test check basis. So what I should check beyond 10 crores means is the outstanding amount, not the sanction amount. Hope I'm clear. Now, this is something that I want to talk to you about. This is the question in the LFAR that asks for the list of accounts that you have verified. We just saw that we are supposed to verify certain accounts in detail and verify certain accounts in test check basis. So whatever you are checking, you will have to give the list of all the account numbers in the first column. In the CBS environment, once you give the account number, all other details will get automatically populated. And then the total will have, total also will get automatically populated. This total outstanding of the branch is the entire amount outstanding in the branch. So for example, the outstanding of the branch is 450 crore rupees. And what you checked is 200 crore rupees. Okay. So this will be 200. The total of this will be 200. And the outstanding of the branch Z will be 450. And the percentage will be calculated 200 by 450. Please ensure that all these columns are properly filled, because in one of the forms we identified that this total is there, but the total outstanding of the branch was not at all available in the report, and automatically the percentage examined became 0. They've actually listed out everything, every account number that they checked, and there was an amount here in C. But Z became 0 because they did not fill this and did not get automatically populated also. And automatically percentage examined became 0. So this is a serious issue because you've actually spent time checking a lot of accounts, but you end up saying that the percentage examined is 0. Next, we'll look at stages of verification. First one is the pre-disbursement appraisal, and then we will look at sanction. Then we'll look at disbursement, sanction and disbursement together. And then we will look at review and monitoring, then renewal or enhancement and asset classification. These are the various stages for verification of an advance. And this is the same pattern in which you will be replying in the LFAR. All right. So the pre-disbursement appraisal is the first stage. As you all know, before giving a loan, the first step for any advance giving is the application from the borrower. A borrower has to submit the application to the bank, and then the bank will start scrutinizing it and ask for further details, and then they will assess whether the loan can be given or not, and then the next stage goes. So first thing is the application from the borrower, where the details of the borrower is clearly listed and he'll have to fill all the information. So it could be about his name, his job, what is his annual income, what is his other loans that he has been having in the bank or other details, his income tax return and all that. Everything will be captured there, how much loan he's seeking, what kind of loan he's seeking. All this will be captured in the application that is submitted by the borrower. So it is very, very important that when you check, for example, you are checking the sanctions made during the year and there's a file in that file, there is Padmaja's loan. And in that Padmaja's loan, I have submitted an application. You find out that I have not filled certain important field, but there's my signature alone. Or worst case, there will be cases where the application is not at all filled. Only my signature is available and there's a blank application. If you find something like that, which means the bank has given loan without properly adhering to all the procedure that is required to be done, then that's a serious issue, bad monitoring, bad credit appraisal. So you will have to list out such observations account-wise and put it in your LFAR. So please do not leave anything unnoticed, or when you notice and then you discuss among your friends and then say, let's not disclose this. That's not how it's going to work. So you will have to ensure that you bring to the notice of the engagement partner even the tiniest of information that is required. Let him decide whether to report it in LFAR or not. So the first step is the application from the borrower. Next, the KYC compliance. You all know what KYC is, know your customer. For this, they will require certain documents to be done, your PAN, Aadhaar, and all that. They will keep asking in the bank account. You've all been, there have been recently a lot of news that states that the bank has given loan to people who were not at all in existence, which comes as a shock because the KYC compliance procedure in that bank has not been functioning properly. They did not even check whether this applicant is a person who is existing or not. There was no such person and they granted loan. This is kind of news that we get on certain days. So this is a very, very serious. So we'll have to check whether KYC compliance procedure is properly followed. Next, timely preparation of proposal for grant. So as I said, timely preparation is important. I cannot submit the necessary documents after sanctioning of loan, after disbursement. I should have submitted the application, I would have submitted the projections, I should have submitted my income tax returns, all of that before sanctioning of loan. So please ensure that they have collected all the documents. You will have to check and tell whether these documents are there in place or not. If it is not there, note the account number in which you do not find such documents. Next is the appraisal carried out in the prescribed manner. So they'll have to get the CMA data, which is like credit monitoring arrangement, which means they'll ask for projections. They will ask for the if a borrower is getting loan for a specific project, they will ask details of the project. All this is going to be captured. So this is very, very important, whether they've submitted all the necessary documents and whether the branch has actually verified it. The branch official sitting there, is it enough to collect the projection and put it in the desk? No. You will have to collect the projection and then check whether they are realistic, whether the projections are realistic. For example, this borrower who is coming and approaching me, I am the branch official, he's coming and approaching me, asking for a loan to do a specific project in an industry. And he's giving me projections. When I take these projections, I will also have comparable figures from borrowers from the same industry, or even if there are not borrowers from the same industry, I will know from Google or from other listed entities, I will know easily how this industry is performing, whether the industry is performing well or not, whether there's growth in the industry or not. For example, in that industry which this borrower is going to function is very low. They are incurring losses all the years. But this borrower who's coming and giving me projections, he's saying he's going to make profits of thousands and thousands crores. Then it should immediately hit my mind that this projections is not realistic. So if the branch official is not applying his mind while taking that application, then the credit appraisal is wrong. Without even applying his mind, if he's giving the sanctioning the money by just saying, wow, he's going to make 1,000 crores is the projection that he has, then it's a serious problem. So you will have to see whether the branch official had actually applied his mind or not while sanctioning that loan. Next, a board resolution should be there in case of a corporate borrower authorizing that company to get the loan. Then financial statements, tax assessments, and the visit report by branch is very, very important, because what is expected is not just the borrower coming and visiting the bank official should also go and visit the borrower's place and check the genuinity of the application, genuinity of the transaction that he's asking for, and then he will have to assess whether to give the loan or not. Verify the appraisal note of the bank. So for every loan granted, there'll be an appraisal note where the bank official whose rank, for example, I'm at the rank of manager, I am supposed to give an appraisal note for the loans that I am going to sanction. So before sanction, I'll type out an appraisal note, whether it was done by the competent authority. So if, for example, I am the manager and I am authorized to give 25 lakhs loan. So I am feeling so lazy today. So I'm asking the next rank official saying, please go type the appraisal note for me. If he is doing that instead of me, then it's a problem, because only I am the competent authority who can sanction this level of loan. Then only I should do the appraisal note, not the next rank or any other rank for that matter. As I said, whether projections are realistic should be properly assessed. Net worth statement of the borrower. And in case of takeover cases, for example, I am a borrower. I have a loan with SBI Bank, and then I find out that the burden of interest and the EMI, I'm a little too uncomfortable, or the services are not properly provided, something like that. Then I switch to another bank. For example, I go to Bank of India or some other bank. Then this Bank of India will get all the documents from SBI Bank stating that these are the things about the borrower. All that will be taken by Bank of India from SBI. So that is the proper transmit. So whether there was an NOC from the existing borrower and all other necessary documents and credit appraisal from the previous banker, whether it was properly obtained or not, you should check. So for example, if you are in the audit of Bank of India, you will have to check whether Bank of India has obtained all this before taking over the loan from that branch to that bank to this bank. Then whether the ratios are satisfactory. If there are ratios, that this is the current asset ratio, this is the turnover ratio, all this is there. Whether these are satisfactory, whether the bank official applied his mind when he was granting the loan or not, should be checked and commented upon. These are the LFAR questions with respect to credit appraisal. What we were seeing is the pre-disbursement or the credit appraisal. So credit appraisal is important for one matter, because at the first stage, or some person is walking inside the branch, on the loan வேணும்னு கேக்குறான். இவனுக்கு loan தரலாமா கூடாதா அப்படின்னு decide பண்றதே in the credit appraisal stage. So here itself, if they miss out something serious, if they miss out that this person is not at all eligible to get loan and he won't be in a position to repay it, but they still do not properly assess it and give it, then they are into serious problems. So what are the questions in LFAR about credit appraisal is, has the branch generally complied with the procedure? So all the procedures and instructions that keep flowing from the controlling authorities, whether they were properly complied with or not, should be given. If there was any major shortcoming in the credit appraisal, they'll have to state it. Have you come across cases of quick mortality in accounts? So what is a quick mortality account? Is when an account becomes NPA within 12 months from the date of sanction. So for example, the branch is going to give a loan on 30th April 2022, and it becomes NPA on 31st August 2022. This not even 12 months has elapsed. Before that, the account has become an NPA, then it is quickly, literally died. So this is a bad credit appraisal, because the branch did not apply mind before giving the account, whether he has the capability to repay the amount or not was not properly assessed. So you will have to list all the accounts that are in quick mortality cases. Whether in borrower accounts the applicable interest rate is correctly fed into the system. So I would like to spend 2 minutes here. Sanction letter, say something called the sanction ticket, where it is going to mention that this is the interest rate at which we are going to charge you. For example, 12%. There won't be a fixed 12% rate. It is going to be linked to a variable rate. For example, MCLR. So what you will usually see in a sanction ticket is MCLR plus 2%. And currently it is 12%. Today MCLR is 10% plus 2%, 12% is the interest rate that we are going to charge today, is what will be in the sanction letter. While keying this in the system by the branch official, when he puts all these details in the system, he will have to ensure that he puts MCLR plus 2%. If he directly feeds in the system 12%, then the borrower will forever be charged at 12%, irrespective of the factor that the MCLR keeps changing every month or every week or every fortnight or whatever is the frequency of the period. Without linking it to the MCLR, if you directly feeds 12%, then forever 12% will only be collected as interest from that borrower. And this could be both ways serious. We could either be undercharging the customer, which is a loss of revenue to the bank, or we could be overcharging the customer, and the customer might someday, when he finds out, file a suit against the bank. So both ways it is very, very serious. So it is very important that the interest rate is properly, correctly fed into the system by linking it to the variable interest rate, if any. We'll have to comment upon that. So how do you check it? Take some random 20 or 30 accounts from the list of sanctions that were made during the year and check whether it is properly linked to the MCLR in the system. So this is what you're supposed to check and comment upon. Whether the interest rate is reviewed periodically. As I said, this MCLR will keep changing frequently. Once it changes, whether the system also changes its calculation and the different interest rate is properly applied or not should be checked by the branch officials on a periodic basis. Whether they have checked or not is what you are supposed to comment upon. Have you come across cases of frequent renewal or rollover of short-term loans? So for example, as you were saying, there will be a fixed limit. So for example, 10 lakhs is the limit and then 8 lakhs is the drawing power. Then if I am operating my account at 12 lakhs most of the time, or suddenly this month there is going to be 12 lakhs in my account, I go approach a bank stating that this 1 month alone I will be operating beyond my limit. I want a rollover. So they'll give me another 2 lakhs for a short term. If my account is consistently there forever at 12 lakhs, it's operating consistently above my credit limit, then I should not go for a rollover. I should go and ask the bank for an increase in the credit limit itself. If instead of doing that, the branch keeps giving too many rollovers for short-term period, then it's a serious problem. So those list of accounts should be given. Next, whether correct and valid credit rating has been fed into the system. So there are credit rating agencies and you will get the credit ratings from those institutions. This credit rating is supposed to be fed into the system. For example, 777 is the credit rating system, then this should be fed into the system. Whether it is properly fed into the system or not should be verified and commented upon. Next, sanction. Next stage of the verification, the advance, is the sanction. As I told you on the first slide itself, the sanctioning should be well within the delegated powers of the authorities. Whether it was there or not can be verified only by obtaining the sanctioning powers document from the bank. Only then you will be able to check and comment upon this question in the LFAR. Whether the disbursement is in line with terms of sanction. So in every sanction ticket, if you see, there are certain terms and conditions. The borrower is expected to comply with all these terms and conditions, and only then the sanctioning can happen. Whether all the charges are collected or not. So before sanctioning, there might be certain charges that the branch must collect from the borrower. For example, registration charges or document charges, or all this should be collected by the bank from the borrower. So whether all these charges were collected or not should be checked. There is one example where in certain cases the charges usually gets collected by debiting the account, debiting the bank account of the borrower that's maintained with the branch. If this debit is done in the account, the account might slip into NPA. To save this account from slipping into NPA, what they will do is debit the account today, and next month they will reverse that debit to save the account from not becoming an NPA, which is evergreening, which is a process of evergreening or window dressing. So to understand whether there was such kind of window dressing done or not, what you can do is take all the income ledgers and see if there are any debits in the income ledgers. Usually income has a credit balance. It cannot have a debit balance. If there is a debit in the income ledger, ask them why. And if the answer is not satisfactory, then you will have to report it in the LFAR. Whether all the documents were executed, for example, the stamping of documents or all other legal documents, whether they were properly executed or not, signed by the people or not, should be checked. The ICAI guidance note has a detailed checklist of with respect to sanction, which you can make use of when you are actually doing the audit on field. Then we'll have to list out all the deficiencies that you find in respect of documentation in the LFAR. So what you have to do is, while you're checking every account, you will have to write immediately if there is something missing, some document missing, or a specific document is not properly maintained, then you will have to immediately note which account number, what is the document that is missing, so that only when you document it immediately while doing the audit itself, you will be able to compile all that. So I would like to tell you one thing very importantly, as article assistants on field or audit staff on field, you must ensure that the documentation is done simultaneously along with audit. Because unlike other audits where you know that accountant, you are very acquainted with that accountant, you frequently meet them, and they are going to be your client next year also. All this comes as a boon to you when you're doing a normal statutory audit. But in case of bank, once you come out of that bank after signing, your relationship with that branch is immediately terminated. They're not going to contact you. You are not going to contact them for anything. Even if you do, they are not going to be cooperative most times. So what you have to do is do all the documentation simultaneously. So you will have to note down simultaneously while doing the audit, what are the deficiencies that you found out in respect to the account number. Noting down the account number is very, very important, because in LFAR, you will give the account number and tell this account number did not have stock statement. This account number did not have a sanction ticket. All this is to be given in the LFAR account wise. So noting the account number is very, very important when you are doing the audit. So please keep that in mind and do the compilation and documentation on the day end itself. Do not carry it till the last date, because if you're not able to do it and if you leave the branch, and you will never get it back. So please keep that in mind while doing the audit documentation. Additional documentation in respect of consortium advances. As you know, consortium advances is multiple banks giving loan to a borrower. So they all come into an agreement that we'll all together give you this much amount of loan. If you find any such consortium advances in your branch, please ensure that all the documentations that are required in case of consortium advances were properly maintained or not. And then verify margin money to be brought by borrower and all that. And you can also check whether charges were properly created in the ROC. So this you can check by visiting the MCA website. While talking about the sanction, I also want to mention about one more thing. If you remember, I told you about a circular that was issued in 2021 by the RBI, right? So in that circular, of the 6 items, I told you 1 item, correct? It's not the as on the balance sheet date. It should be checked for NPA during any time during the year. That's the first thing that I told you. The second thing that's there in that circular is the sanction letters. So you know this, there's a sanction letter. In that sanction letter, you will also find out the there's also going to be this month, this is the month, and this is the interest, this is the principal, this is the total EMI you have to pay. This will be mentioned in the sanction letter. If you see that repayment schedule, it's called a repayment schedule. And if you see that repayment schedule, it was usually April 22, first installment, April 2022. 1 lakh rupees is the EMI. May 2022, 1 lakh rupees is the EMI. This is how it was mentioned, correct? And then the breakup of the 1 lakh will be given in the statement. After November 2021, what RBI said is April 2022 is a month, correct? It is not giving a specific date, but it's only giving a specific month. What happened is when it was April 2022 in the sanction letter, the borrower, he will come and give the installment, this EMI, on 30th April 2022. And he will say, I have paid within 30th April itself. So do not make my account NPA or do not calculate any, for example, for 3 months, he has not given April, May, June. Okay. So if April, May, June, he is not giving, and on 30th June, he is coming and settling the amount. For April 2022 installment, if he is paying that April 2022 installment on 30th June 2022, what he said, what he used to argue is, I have settled the amount within 90 days. Don't make my account NPA. But what RBI is saying, do not mention April 2022 in the sanction letter anymore. All the banks have to give a specific date, whether it's 1st April or 2nd April or 3rd April or 4th April, you have to give a specific date. So for example, in the EMI schedule, prepayment schedule, if the date says 4th April 2022 is the first installment due, 90 days should be calculated from 4th April. Then you'll have to calculate 90 days. So it's probably going to end. Probably going to end even before that date. So you'll have to calculate 90 days from that specific date, but not the end of the month. So please be very careful while checking any sanction letters, any sanction letters during the year. All those sanction letters, the repayment schedule should not have a month. It should have a specific date. So please ensure that. Also, those loans that were sanctioned before November 2021, at the time of renewing, they'll have to give the specific date instead of a month. Please please check while you are checking the sanction letters whether this was properly adhered to. Then disbursement. Before disbursing, they should have to ensure whether all the documents are properly executed or not, whether insurance is there, and whether this insurance, in that insurance, there will be something called the endorsing it to the Indian bank, endorsing it to Bank of India. They'll mention which branch, which bank they are endorsing it to. So whether this is done or not should be properly verified. And then disbursement as per agreed terms. For example, if I'm going to go and approach a bank for a housing loan for construction of 3 floors, the bank will not give me the entire amount on day one. What they are going to do is, say that on the completion of first stage, this much amount will be disbursed. On completion of second stage, this much amount will be disbursed, and on third floor, it will be disbursed. So this is how it will be designed in the sanction letter itself. If this is the terms that is given in the sanction letter, then you will have to check whether each of the disbursement happened only after completion of the first stage, second stage, and third stage. They cannot give it on day one. Next, we look at disbursement to third parties. Again, banks will not directly pay to the borrower. What they will do is they will remit it to the third party, the builder. In our case, for construction of the housing loan, they'll not give it to me. They will give it to the builder. So directly to the bank account of the builder, it will get credited. Again, in case of vehicle loan, if I'm going to purchase from TVS, they'll credit it to TVS directly. They will not give it to me. Nowadays, even term loans for machineries that are taken by companies or any other borrowers, the supplier's PO is taken, and based on that, they will give the money directly to the supplier's account, and they will not give it to the party who is the borrower. Okay, so whether it is given to the third party correctly or not should be verified. Certain banks, what they do is, as you all know, they do not give you 100% loan. For example, if the house value is 10 crore rupees, the bank will not give entire 10 crores. It will say you will have to take margin of 20% and I will pay only 80%. So 8 crores funding will be done by the bank and 2 crores should be paid by me. Earlier, what happened was they will give the 8 crores directly to the vendor. They will not ask me to give the 2 crores to them. Nowadays, certain banks are insisting that the 2 crores is collected from the borrower to the branch, and together 2 plus this 8, they will directly remit to the vendor. But if that is the policy of the bank that you are auditing, please ensure whether the disbursement happened according to the terms. LFAR questions on sanctioning and disbursement. Credit facilities, whether they were sanctioned beyond authority or limit. The first slide that we saw, that's the answer here. Are such cases reported promptly? If there are any variations, is it promptly reported? And all the terms and conditions, whether they are complied with or not. And whether the banks have provided loans to companies for buyback of shares or securities. How do you know whether a bank gave for buyback or not? Probably what you can do is, when the financial statements are submitted, audited financial statements are submitted, you can easily see the movement in the paid up share capital. So paid up share capital would have reduced from certain amount to certain amount lesser as compared to previous year, which means there was a buyback during the year. If a loan was given just before the date of buyback, then probably that amount was used for buyback only. So by this way, you can check whether the amount was used for buyback or not and report here. LFAR questions on documentation. Whether all of the documents were properly executed, whether deficiencies were identified, and in what accounts did you identify what kind of deficiencies should be given. And advances against lien of deposits. As you all know, you've all seen a fixed deposit receipt, correct? In that fixed deposit receipt, there'll be a column, there'll be a seal that states it's lien mark, which means there is a loan taken against this deposit. So you cannot redeem the deposit as and when you like, because you'll have to settle the loan first before redeeming the deposit. So what is important is, nowadays we do not visit the bank for a fixed deposit opening. What we do is remotely sit from our net banking, open a fixed deposit account. How will they protect this fixed deposit from being redeemed? It is a very simple tick mark in the system. The branch official will only put a tick mark in the lien column, which will restrict the borrower from redeeming the deposit from anywhere without paying the loan. So it is important to check whether all the lien marking of deposits were properly done in the branch or not. Next most important stage in advance is the review and monitoring. This review and monitoring, what is expected is the branch official should keep monitoring the account. Is the job of the branch official over after he sanctions the amount? No. He has to monitor the accounts, operations of the account frequently, and make the earnest steps to save an account from becoming an NPA. So periodic review is insisted. Justifying the end use. What I gave a loan for a specific purpose. He said he's going to use this money. I gave his CC account. He's going to use the money for business purpose. If the amount that he is drawing is used for example, his daughter's marriage, or he's using that money for some other personal purpose, then the end use is not proper. So this should be properly verified whether the end use is done or not. I gave it for a business purpose, but he is using for a personal purpose. Then it's a serious issue. So it's the duty of the branch officials to monitor whether the end use was properly justified. Next, if there is a difference, then it should be properly reported. I don't know how participants draw in this, but it's actually disturbing. Okay, next is the prompt reporting. If there's any deviation, whether it was promptly reported or not, should be checked by the branch officials. In case of working capital limits, as we saw in CC and OD, it should be renewed. Whether it's properly renewed or not should be monitored by the branch officials. Again, as I told you, on the first day, he's going to submit the projections. For example, on 1st April 2022, I'm submitting projection for March 2023 that I will make a turnover of 10 lakh rupees. But once the audited financial statements is given to the branch, instead of 10 lakhs, there is turnover of only 2 lakh rupees. The branch official should have questioned the borrower. Why is there a huge variation from what he projected and what is actually happening? If he has not questioned it at all, then there is a very, very bad monitoring and it should be reported. And this is the fraudulent transaction to be reported by RBI. So the RBI in a circular about the master circular about fraud gave an annexure stating list of 45 items, 45 list of items that are early warning signals which should alert the bank officials about some wrongdoings in the loan accounts, which may turn out to be fraudulent. So if any of these 45 items are happening in respect of an account, it is the duty of the computer system that the branch is operating in. It should be equipped well enough to say that there is some kind of wrongdoing with respect to this account. Please be careful. Ava Sanjing, please be very, very careful about this account because this could slip into a fraud account. The system should highlight it to the bank officials. Whether it is done properly or not, we are expected to report. If it is not properly done, we'll give in the LFAR in the fraud section that the system is not properly highlighting to the bank officials about early warning signals in respect of accounts. Please read that master circular, the list of 45 items. It could come as a shock to you because there are certain really, shocking things that are expected to be highlighted as early warning signals. Intelligent scrutiny of bank statement or debit and credit entries. As I was telling you, all the turnover should have been routed through this bank account only. Cannot be done with any other bank or through cash. So only when you check the credit entries and the deposits in this account, you will be able to understand if there is any mishappening in the account or not. And you'll also have to check the movement of stock along with the stock statements. And you all know you would have given in your from your audit firm the book date statements, which is certified on a quarterly basis, stating that this company has this much of book debts as on 31st March or as on 31st December. Whether this was properly checked by the branch should be verified. And for giving this report also, there is a specific format in guidance note for special purposes. There's a specific format that the auditor has to follow while giving a report on this. Okay. The drawing power limit is computed according to a specific formula. Okay. In that, there are two different views taken by experts whether to reduce sundry creditors or not. One set of experts say that sundry creditors should be reduced, and another set of experts say it should not be renewed for a very deducted because for the simple reason that it's being double financed. Sundry creditors itself is a short-term financing only. If the bank is again going to fund it, it's a double financing. So every bank might have a different policy. The bank that you are auditing in has a policy that the sundry creditors must be deducted for computing DP. Then you will have to ensure that this policy is being followed across all the borrowers. They cannot do a favor to a specific borrower and be unfavorable to certain others. So it's very, very important that it is followed unanimously in all cases. So you'll have to understand the policy of the branch or the bank. Have they monitored the obsolete or unrealizable stock? So if there is an obsolete stock, they cannot have that as security and give a CC limit. They'll have to reduce the obsolete stock while computing the drawing power. And in case of non-corporate entities where the sanctioned limit is beyond 25 lakhs, the RBI is insisting on an audit. If tax audit is done, it is sufficient. But if it is more than 25 lakhs, there should be a definite audit for non-corporate entities. So if it is not done, then you will have to report on your LFAR. As you all know, the financial statements and audit report was revised recently. There is the revised Schedule 3 and revised CARO 2020. This CARO 2020 has certain specific clauses that the branch can use for their benefit. For example, whether the periodic monthly statement submitted by the company to the branch is in agreement with or not. Because month on month, who is submitting is the borrower. But the CARO is given by the auditor, who will rely upon the auditor, not the borrower. So the branch official should see the CARO 2020. If the auditor is saying that the figure submitted by the borrower to the bank is not in agreement or it's disagreeing, then the branch official should actually open his eyes and ask the borrower, why is there a difference? If he's not doing it, then the monitoring is bad. Then you can give it in the LFAR. These are the questions relating to review and monitoring in the LFAR. That says periodic review is done or not. In certain banks, they have this policy of getting balance confirmation. Like you all know, we get balance confirmation from sundry debtors or creditors in case of audit. The banks also insist on getting balance confirmation from the borrowers. If there is a policy like that, whether it was obtained or not, whether the stock audit reports are obtained periodically, and as I said, non-corporate entities, whether audit is done or not. Are there any red flagged accounts? As I said, these early warning signals, if there is an early warning signal, that account will be red flagged. Was it properly done or not? Apart from all the specific questions, if you have any other adverse comments in respect of top 5 standard large advance, we saw what a large advance is. And if it's a standard advance and you find some adverse features, you can list down in the LFAR. Then the asset classification. Tomorrow's class will handle about how you need to classify each of the asset into the SMA 0 or 1 or 2, or whether it should be substandard or doubtful. All this will be handled. Whether the classification of the advances were actually done according to those IRAC norms is to be commented upon in the LFAR. And all of this should be done without manual intervention, because all of this is being done by the system. The system itself will mark an account as an NPA. Immediately it becomes an NPA. If there is a manual intervention, it should be recorded. And whether it is done or not should be commented upon in the LFAR. And downgrading and upgrading of accounts in case more than 10 crores should be listed along with reasons. Any account that is restructured, what is restructuring? If I give a specific benefit to a specific borrower that I'm not giving for all the borrowers in general, then it's called a restructuring. Once I restructure a standard account, it becomes it should be downgraded. It should be downgraded from a standard account. If I'm not doing it, then I'll have to report in the LFAR. Whether upgradations were properly done in accordance to the norms. These are the questions about asset classification. So whether any changes, so for example, the branch has classified an account as SMA 2, but I say no, it should not be SMA 2, it should be NPA. Then I should incorporate such changes in the MOC for any kind of disagreement that I have with the branch as an auditor. So all of that must be listed in the LFAR also, and also must be given in the MOC. How should you approach an LFAR? What should you do with respect to LFAR? There are certain questions in the LFAR where there are specific limits. Beyond this limit, this is what you should do. Below this limit, this is what you should do. You should follow that instruction specified for that specific limits. So ensure that. And then you will have to answer each of the question in the LFAR based on the opinion and based on the test check. You are test checking certain accounts and you are coming to a conclusion that with respect to this alone, with respect to credit appraisal alone, the branch is not following properly. Then you will have to give your answers in the LFAR based on the opinion that you have drawn, which was again based on the test check that you did with the samples. Plan your LFAR work. Do not do it haphazardly. Every day carry an LFAR report with you, and then every time you check something and something adverse comes to you, make a mark immediately in the LFAR against the question that you find it. So once you do that, you can immediately on the day end or on the last day, you can compile the answers of all the audit assistants that are working on field and answer the LFAR instead of finding the answers only on the last day. Please ask all the information that is required on the day of audit. Somebody asked what is an SMA? It will be explained tomorrow. It's a special mentioned account. What is a special mentioned account will be handled tomorrow. Ask information on day 1 of audit. Take a checklist with you and please give it to the bank official on the first day itself. Do not ask any information on the last day, because it will be too late to get any information if you give it on the last date. And do the LFAR simultaneously with audit, because once you finish the audit and then start afresh the LFAR, you will not be able to find the answers. So it's very important that you do both simultaneously. No vague or general comments. Please be very, very specific in your answers. You cannot say generally the branch has complied with all the conditions. You will have to say specifically in certain cases, in these cases, these account numbers, it was not properly done. So that should be properly stated in the LFAR very specifically. If you have a shortcoming or a weakness or a reservation or an adverse comment with respect to a question in the LFAR, you will have to give it with reasons. You cannot just say there is a weakness in this stock statement. You will have to say what is the weakness that you found out with respect to collection of stock statement. Please do not copy LFAR from previous year. As we all do in case of a normal statutory audit, we just copy paste from the previous year's audit report. That's not how it can be done in an LFAR. Why? For a simple reason, in previous year's LFAR, they would have given that a certain account number did not give stock statements. That account number would have been closed in the current year. So there's no point in you giving that the statement was not obtained for this account. So please do not copy it from the previous year. If you find any major qualifications, that is in LFAR, if you find out any qualifications, then you will have to give it in the main audit report. Not every adverse remark should be given in the main audit report. Only those that you find major should be given in the main audit report. Then in case you do not find any records, if there's a non-availability of record, please disclaim your opinion. These are red flag accounts that are other than what I gave as 45 list of items. When I circulate this, you can use it for your reference. Non-funded advances are those advances where there's no outflow of cash, for example, letter of credit, guarantees and all that. Please ensure that you verify non-funded advances as much as you verify funded advances also, because it's very important. And as you all know, major frauds are happening with respect to non-funded advances only. So please be careful there and get that list of non-funded advances on the day one of audit itself. In case a borrower has more non-funded advance than it has funded advance, please ensure you spend extra time while verifying there, because it could be serious. These are examples that are for evergreening. These are very self-explanatory. You can check that. Reporting is done in 3 different formats. One is the audit report, then LFAR and MOC. Audit reports is like a general audit report that you give for any statutory audit. The LFAR is what we've been seeing all this while, which has specific questions and you have to give specific answers. MOC is memorandum of changes, where if you are disagreeing to some classification that the branch has done, if you have a different opinion, you have to incorporate in the MOC. This is an MOC. This is what it will look like. You are telling the branch central statutory auditors that you will have to pass this journal entry with respect to this branch, where you will give the code number, which account should be debited and which account should be credited. And what is the number of items under each of it, whether you're increasing the income or whether you're decreasing the income or whether you're increasing the expenditure, all of this should be given in the MOC. This MOC again should be given in the main audit report. And if there's a nil MOC, then you will have to give a nil MOC. With this, I complete my session, and I've also given my mail ID here for your reference. If you have any doubts, you can post your doubts there in mail also. I'll respond to it. Questions, special mention?
Good evening, ma'am. This is Ranpesh.
Yes, good evening, sir.
Ma'am, I actually have a doubt regarding an unsecured loan.
Okay.
So how reliable is CIBIL report as a sanction ticket with respect to an unsecured loan?
No, the bank has the policies that it has to collect these. You will only have to check whether they've collected all that. Again, CIBIL report is not the only conclusive evidence that this person is eligible for getting a loan or not. A branch official, If for example, the CIBIL report is actually good, the branch official can still say, I'm not going to give a loan to him for various other factors. If the CIBIL rating is bad, the branch official can still decide that he is going to give the loan on various other based on various other factors. So it is absolutely the discretion of the branch official and also his business decision whether to give or not. But whether he has complied with all other conditions, not just the CIBIL report, all other conditions and has applied his mind before giving it is what is important. Whether you can rely 100% on CIBIL report, no.
Okay. Okay. Okay.
What are the documents to get on day one of the audit? I told you in the first slide itself, the balance sheet, P&L, NPA statements and all that should be obtained along with the sanctioning powers of authorities. Any other questions you can post your SMA accounts? As I already told you, it's special mention account. You will understand in tomorrow's session what is an SMA account, when it becomes SMA.
Hello, students. As you all know, I don't think you have been given the option of unmuting yourselves. So whoever has got any doubts, please feel free to post it on the chat box. Do not hesitate. Please feel free.
There's a question how to check early warning signal. There is a separate report in the auditor's menu itself that tells you what are the early warning signals. The system will identify such early warning signals. You will only have to check whether the system is functioning. You are not supposed to check what is the early warning signal, whether it is there or not. You're only supposed to check whether it is properly functioning or not. Housing loan and vehicle documents at CPC. Certain auditors, they have the practice of visiting the CPC and getting documents. If that's what you're doing, you can reply in the LFAR accordingly. If you have not visited, you can just comment upon whether there is accessibility properly got or not. Will the PPT be shared? Yes, I hope so, because I'm sending it to the organizers. If they want it, they can share it to you. So that is it.
Is there anyone else who wants to add on? I mean, is there anyone else who's left with questions being unanswered?
CC loans every month sanction limits need to be changed. Yes, yes. Based on stock statements, the DP keeps changing. Minimum percentage of verification of loans sanctioned during the year. No, Kana, as I already told you, large advances must be checked fully. The other advances, small advances, must be test checked for systems and controls, and not 100% verification is required. So I cannot give you a proper figure that if low percentage you check for. No, I can't say that. That depends entirely on the judgment of the engagement partner. But for large advances, you should do 100% verification. Where should we report loan sanction against the bank's overall policy? Okay, whatever is the violation, you will have specific question in the LFAR. If your answer fits directly to a specific question in the LFAR, you can put there that without obtaining this document, the manager has given loan. You can put there straight away. And you should also mention the account number. Remember that. Some info on quick mortality account. As I said, anything that falls into NPA within 12 months. So today I'm sanctioning, and within 1 year it becomes an NPA. That's a quick mortality account. How will it become an NPA will be explained tomorrow. My email ID was there in the presentation. I think it's still there. I really didn't know there was an option where you can draw on my screen. It's super annoying. Please don't do it.
I'm sorry regarding that. Apologies.
No, it's okay, fine. So yeah, they'll send you the PDF. What other question?
Nirmal is asking a doubt regarding insurance.
One second. Where these exceptional loans should be reported in LFIR. As I showed you, there is each question very specific. So, for example, whether stock statements were obtained regularly. If you find that an account did not have stock statements regularly, you have to answer in that against that question. So, for that specific question, you will have to specifically answer. If your observation does not fall into any of those questions, you can put in the general comments. Priority and non-priority fund. Again, it will be explained tomorrow, but again, for the benefit of everybody, priority is when you need the assistance of a government. So you are given preference over the others, and a branch cannot say no to giving a loan to that priority sector borrowers. So that's priority sector. It will be listed. These fall into, for example, agricultural advance. Insurance to be taken on total stock value, or will it be sufficient if the stocks insured to the extent of DP value? No. See, the DP value itself is dependent on the stock value, right? That stock value, to the extent it is insured, it will be taken. For example, 10 lakhs is the stock value, and you've insured 8 lakhs, then on that 8 lakhs, DP value will be calculated. So you will have only based on the insured amount of stock, it will be computed. Whether NP is an adjusting event of the balance sheet. When you find out that it's an NP account, you will put it right there in the MOC itself that it should be done as on 31st March 2023. So on 23, you should make that account NPA through the MOC. If the auditors are disagreeing to what is classified by the branch, you will have to put it in the MOC. Particular points for lockers, ATM cash and jewels. There are specific questions again in LFAR. If you are able to collect enough evidences for answering those questions, it's fine.
Even if everyone's done with, we can actually end the session. If anyone left over, please do put your.
Madam, what if particular customer paying loan on 89th day to avoid slipping to NP? Yeah, that again should be an early warning signal. If it is from a genuine source of credit, it is fine, but you will have to check the genuinity of the source. If it was again given by the they are crediting from by taking a loan in the same branch, then it's a serious issue. All right. So I think we're done with questions, Aditya. MCLR is marginal cost fund lending rate. It's that full form. It's a rate that's prescribed and it keeps changing every year. I mean, every frequently, every quarter or every month depends. And that interest rate the bank is sanctioning will be linked to such variable rate. I think we can close, Aditya.
I'm sure, ma'am. Aditya is actually not available. So
okay, Venkateshwaran is talking. I'm sorry.
Okay, ma'am. Thank you so much for your for this amazing session, ma'am. On behalf of the entire SICAI team, I extend a very happy note of thanks to you to have making up, and to have given students learnings about LFAR and bank audit theory. And I would also like to thank CA Chengal Reddy sir, SICAI chairperson, for his enthusiastic support. and to the one that has always looked for ways to provide new learning experience for students in all possible occasions. And also students, I pretty much sure and believe that whatever has been covered in today's session will be of great help to you in your upcoming bank audit days. Please take care of, if you had taken notes, please use them in a great way. And also, I would like to make a small announcement. So as you all know, there are 2 more sessions. One is happening on tomorrow. The other one is happening the day after. Tomorrow, there is a webinar on IRAC norms. And on Saturday, there is a webinar on bank audit using technology. So I hope to have the same level of participation for those 2 webinars as well. And I promise and assure you that both of it will be as interesting and engaging as it was today. Thank you so much. Thank you once again, ma'am, for the wonderful session.
Thank you. Thank you so much.